I'm Charlotte McLeod with investingnews.com, and here today with me is Will Rhind, CEO of Granite Shares. Thank you so much for being here. Great to have you as always.
Thanks, Charlotte. Good to be back. Thank you for having me.
Really good to be speaking with you. Definitely, we have so much to go over when it comes to gold and the markets in general. So let's start with gold, because it's been a pretty interesting week where we saw gold really take a hit when all the tariff announcements started going on. Now it's bounced back pretty strongly. I think as we speak, it's either at or near all-time highs once again. So let's talk about what's going on there. I'm wondering what investors can take away from that fall in gold, but then the pretty quick rebound that we've seen.
No, absolutely. So we just actually touched a new all-time high. So, again, very timely to be talking about gold, but I think that the backdrop to what's been happening is that the one thing that we've probably been missing from the gold conversation, at least over the last sort of 12 to 24 months or so, where gold has been steadily climbing in price, first obviously through $2,000, and then $2,500, and then to $3,000 and beyond, was this fear premium, as I like to call it. So in other words, the fear that would really ultimately motivate investors to get out of equities, to get out of other assets and buy gold. And I think we really had that for the first time, starting this year, just with the correction, if you want to call it that. But the much more serious nature of the last few days, with the ratcheting up of the tariff talk, and specifically then the rise in not just the 10-year yield, but the long bond as well, which was causing some significant stresses in the market. So I think big sort of fear premium baked in. Investors really, for the first time, I think in some time, started to worry about the return of their capital as opposed to the return on their capital. And that's typically the time you see people most motivated to buy gold.
Definitely, it feels like we've got fear alive in the markets for people. So do you see that as something that will stay with us for some time as this turmoil continues? Or is fear-driven moves, are they something that typically happen and then they fade away?
Well, typically they do fade away, like everything. There's always a seriousness and a different phasing to whatever panic or crisis is out there, and these things do typically tend to abate after some time. But I think what certainly has gotten people worried today is that we had that huge relief rally. You might even call it a short squeeze yesterday, after the tariffs were effectively put on hold for another 90 days, with the exception of clearly China. But I think that investors started to realize that perhaps, some of the damage has been done, and that, again, we're still in a trade war situation with, at least as far as it pertains to the US, the largest trading partner, which is China. So I think from that perspective, there's still some uncertainty out there. Certainly this is not over yet. And I think fears of the combination of rising prices through tariffs and slowing economic growth, fearing this sort of stagflation narrative.
I think let's talk a little bit more about the tariffs, since that's kind of central to everything that's going on here. What is your sense of what the end game is with tariffs? We've seen a lot of flip-flopping back and forth, and as you mentioned, that's been causing so much uncertainty. What do you think is Trump's goal?
I mean, look, that is the key question in all of this, and it's really difficult to give a coherent answer on that, because I think we've heard different things, which, they're not always, or indeed they're sometimes directly contradictory with one another. So, you might hear narratives such as lowering the deficit, which is a different thing to saying, creating a level playing field for trade, which also could be a different thing as saying we want to maximize revenue from tariffs and abolish the IRS. So there's a bunch of different things that have been thrown out there. And I think The one thing that has been said that seems to be at the core of it is this idea of trying to rebalance, I think, some of the manufacturing, and in other words, bring some manufacturing jobs or create more manufacturing jobs in the US, particularly perhaps those types of manufacturing jobs that have been lost to lower cost destinations such as China and things over the last 20 plus years. But I mean, going back to the original question, that is the seminal question of this whole tariff debate, which is what is the end goal here?
Well, thank you for taking a stab at it. I know because there are so many different possible motivations floating around, it's hard to give a straight answer, but I think you covered a lot of the different things that are going on. So I know with the tariffs, one of the big concerns is inflation, and I'm curious to get your thoughts on the outlook for inflation as we head forward, because I've heard a number of different perspectives on that as well.
Yeah, so I think this is also another confusing subject. Because when a tariff is implemented, it's assuming there are not more tariffs that follow. In other words, escalatory tariffs, that it's a one-off adjustment. So like the 10%, for example. What it does is you have a 10% price adjustment to the upside. So clearly that is inflationary, but that is a one-time price hike or price increase that in of itself is not the same thing necessarily as saying, you have rising inflation in the economy. In other words, you have inflation that's increasing at a certain rate every year. But of course, the act of a price hike in of itself is inflationary. I think the bit that confuses people is that, typically what comes with price hikes is a slowdown in economic growth. And that's typically because you get demand destruction. In other words, if the price for, vehicles or appliances or whatever it may be rises beyond a certain point, consumer behavior is affected. And if consumer behavior is affected, that means that consumers slow down their purchases or even just delay their purchases. That creates this, demand destruction, which is reduced demand for the goods, and therefore that ends up impacting economic growth. That's a slowdown, goes to recessionary. And then, of course, in that environment, tariffs are actually deflationary because they spark ultimately a recession. So it can be so inflationary at first, but then ultimately lead to disinflation or outright deflation, and if there's a recession.
Okay, I think that helps me understand. So it's not exactly one or the other. It can be one thing at first, then progressing into something else. Very interesting. So maybe we talk a little bit more about that slowdown and into a possible recession. I know that's back on everybody's minds right now after maybe we had sort of put it out of our minds that we might be heading to a recession. So what is your view? Is that what's coming for the US at this point?
I don't see it right now because, again, I think now some people will say that yesterday, the big rally I'm talking about, so one of the biggest rallies, when the pause was announced, the 90-day pause was announced in the market that we've seen for some time. Some people might say that was a short squeeze, and certainly I think that is a part of it. But I do think that the tariffs are all coming from the U.S. administration. This whole conversation is about the U.S. administrations, and particularly, obviously, the president himself. So as we saw yesterday, one tweet that started with, to paraphrase something like "it's time to buy," ended up 90 minutes later with a pause in the tariffs and an absolute, rip in terms of the market rally. So, one person can stop this. And one person can turn around and say, you know what, we're actually going in a different direction, which is effectively what happened yesterday with the 90-day pause. So in that sense, we have to sort of remind ourselves that we did go from a situation where the market was sort of firing on all cylinders, different recessionary indicators that people look at, none of those were flashing red at all. And now we're in a very different environment caused again by this administration. So I remain hopeful that, at least in the short term, that something like yesterday can obviously change, and sentiment will change very quickly. We saw people, rushing to buy, huge eagerness to buy the market. Now, there is, again, a timeline to that, or there's a lagging effect there, where the longer this goes on, the more that, people start to lose confidence. And, whether it's confidence in the administration themselves, whether it's confidence in this being the right strategy, whether it's just, confidence from business leaders, from CEOs, etc., about clearly planning the next, forget about 5 years of growth, the next 12 months in terms of guidance, earnings, supply chain management, etc. So there comes a point, and it's already there. You saw, at least I think it was Delta Airlines talking about, removing guidance for the earnings call due to uncertainty, that this starts to snowball into this knock-on effect of, ultimately, I think it's about confidence. And if people don't feel like they have, confidence that there's going to be a job for them in 6 months' time, whether they're going to be able to, spend the money or justify spending the money to go on vacation, whether they can do that renovation, whatever it may be, that's when things start to slow down and you have a problem.
I think that's a really good overview. And it's quite interesting to see how markets are really turning on a tweet at this point. And I want to ask you about the Fed as well, and what the Fed may do from this point, because we're having these very quick moves based on tweets and other things that are going on. Whereas the Fed, of course, is quite slow moving and methodical, and they want to think about what they're doing. So curious what you think the path forward there might be as we head toward the next meeting and further into the year.
Well, that was a plot twist, to say the least, in the sense that, the Fed started this easing cycle, which everyone's well aware of, and started the pathway from tightening interest rates to lowering interest rates. And I think, with different sort of, everyone had their view on how fast that would be and how quick that would be. But I think nobody really envisioned that at the same time the Fed was cutting interest rates, that we'd actually have an increase in interest rates in the market, particularly, in the 10-year bond and the longer dated bonds. So that was a conundrum, to say the least. And, the president has been calling for the Fed to cut rates, but, very difficult to do that when you're seeing what is evidently, stresses in the bond market, where you have this extraordinary environment where, the bond yields are going up. And so in that particular environment where, people are obviously selling treasuries or selling bonds, bond yields are going up. And officially on the other side, the Fed's talking about cutting interest rates, you're in a very, very difficult situation.
I think that's definitely true. So we'll have to keep an eye on what's going on with the Fed. I want to go back to gold as well. So we've covered, I think, the tariff angle pretty well. And you mentioned how it's the fear component that's helping to drive gold right now. But of course, there's so many other factors at play for gold at the moment. What other key points are you watching at this time for gold?
Look, I think the two most important ones at the moment are, the fear premium that we talked about. But the other one is the global money supply. And if you look at a chart that tracks the global money supply versus the price of gold, you'll see that the two really move, or have moved, very much in concert with one another. And, it's easy to think about what that means. And that is that as the global supply of paper money increases, then the value of gold increases. But perhaps another way to think of it, which is sometimes more intuitive, is that it's maybe sometimes not necessarily the price of gold is going up. It's the value of paper currencies is going down. And so that's really, and a sort of sometimes a more insightful way to look at it. But for all we're talking about, here in the US, a reduction of the deficit, we're talking about Doge and all of these other sort of, potentially intentioned projects. The fact is that global M2, i.e. money supply, is still increasing. And that is correlating with the increasing rise in the gold price. And so we've seen, the effects of that in terms of short term, like the weakness or the dollar, declining, which obviously is part of the story that helps gold. But I think the bigger picture to me is this idea that, the paper money supply keeps increasing against gold. It's not necessarily about gold prices rising. It's about the value of paper currencies falling in relation to gold. And of course, add in that fear premium on top of that. And that motivates investors to get out of whatever assets it is and into gold.
Right. I think that big picture view is definitely important. And I know you just said that it's about the purchasing power more than the price of gold, but I will ask you about your thoughts on the price of gold in 2025, even though we should, turn it around and think about it in the other direction.
Yeah. So if you look again, go back to the M2 example. Actually, if you look at something called the M2 ratio, which is the money supply, divided by the price of gold, that is a particularly scary chart. Now, obviously, if history is any guide, then when the ratio is high, that typically means that gold is overvalued, and when the ratio is low, typically means that gold is undervalued. And actually, if you look at it right now, we're somewhat, I would say, below the median. In other words, we're closer to gold being, undervalued rather than overvalued at a time when we've just talked about gold hitting a new all-time high. So it's a very interesting ratio to look at, and obviously has been instructive in the past when you look at previous either gold peaks or gold troughs.
Okay. And I think I can probably guess the answer here, but everything is sounding really quite positive for gold from what you're saying based on many other conversations that I've had. Is there any bearish scenario for gold at this point that could possibly play out?
I mean, there are always bearish scenarios. We can concoct, a number of different situations which would be negative for gold. However, really we're talking about a situation where I think the fear premium gets removed. So how would that happen? As we kind of alluded to, would have to be this new, whatever we end up with the tariff regime, whether it's some kind of new economic order or whether it's just an abandonment of tariffs, or whether it's tariffs just like in the first Trump presidency, albeit a fairly modest or level that the market can manage. And then once you remove the fear premium, it would have to, I think, have M2 money supply ultimately going in the opposite direction. In other words, a tightening around the world of money supply, which it's difficult to really see that scenario kind of at the moment, the way that governments around the world are acting, given the levels of debt that's outstanding. So, there's always a bearish scenario that you can concoct. I think the likelihood of that happening at the moment seems to be slim.
Yes. Yeah. I know that gets into a little bit, maybe too speculative of territory, but I think it's always interesting to take a look at the other angle. So thank you for going into that. And, when we're talking about this fear that's driving gold, I think maybe the other half of that is to do with the US stock market. So a lot of turmoil there, a lot of fear as well, I think, driving what people are doing. So how do you see that playing out? Are we just going to see maybe a continued shift away from equities toward gold and precious metals, or any further thoughts there?
Well, we definitely have been seeing increased allocations to gold. So if you look at gold ETF flows, then people are definitely allocating money to gold ETFs and to gold more broadly. So that is definitely something that has been going on. Now, again, I come back to the point about stocks, which is, we've seen people buying dips consistently since the beginning of the year. So this is, to this point, I still believe largely the conviction of investors is that this could all stop just like it did yesterday, with one tweet, one announcement. This could all kind of go away. The longer it doesn't, again, that's when the issues come. So you're testing people's faith, people's belief, and the longer this goes on, the chances that A, people lose faith, but B, really starts to impact the economy, and then you have a problem. So I think people are prepared to give the president, give the administration the benefit of the doubt at the moment, and that they're prepared to view this as really a buying opportunity more broadly. However, it won't last forever. There will come a point where people say, look, there has to be a change. That started yesterday. We'll see how that ultimately manifests itself.
I think you're right. There's only so much people can take of the back and forth. So watch that to see how it plays out. Before I let you go, I also want to touch a little bit on silver. I think silver is pretty interesting right now because it's got that precious monetary angle that maybe tells us it should be doing well. And then it's got the industrial side where people are worrying about recession and how that could weigh on the price. So what's your outlook for silver in 2025?
Well, I think as you've seen with the price, there's been a rally in the price sort of fairly recently, which I think means that in a world where people are looking for alternatives, then silver is clearly one of those, and so it's benefited. I think the recession part is not really a concern right now to me, but if we were to go into a slowdown, if this growth scare that we're sort of seeing right now really becomes something more than that, then I think the industrial properties of silver play out much more, and it becomes more of that, the asset that sells off in a recession. But for right now, I think it's trading more in line with the gold price from a correlation perspective. In other words, that in an environment where gold prices are rising, then silver tends to do so as well.
Okay, I think that makes a lot of sense. We need a little bit more time to perhaps see what's going to be going on with silver. So I'll put it back to you one more time before I let you go. Any final thoughts you would leave investors with, maybe on the note of what investors should be doing right now? As we've been talking about, people are really looking for places of safety, it seems like. So any final advice or thoughts?
Yeah, I think, I do think that the tariff situation will get resolved. I mean, clearly the market spoke in my mind yesterday, and that was the check and balance that was really needed to avert disaster in the market. It's a bit technical, but you had the 10-year and the yields going up, and that was largely as a result of something called the basis trade, which is a very popular trade that hedge funds and other people have, which is a hugely leveraged bet on interest rates. And, that started to break down. We also, had news, whether it was true or not, of a large sovereign that was also selling treasuries. So, there are definitely warning signs there, but I do think that this can go away quite quickly. Now, again, the longer it goes on, how much does it dent confidence? How much does that become self-fulfilling? And growth slows down, therefore leading to recessionary type conditions. And we know that a lot of the major banks and things have increased their odds on a recession this year. But I think we're still in a good place. There's just a lot of volatility around this sort of horse trading of tariffs. But clearly people are starting to diversify, and that's something that started at the beginning of the year. With the correction that we saw in the markets and the uncertainty around tariffs. And I think that will continue for as long as we have this lack of clarity. But if we do start to really go into a recession, then expect that to accelerate in terms of people buying gold, people buying short-term treasuries, other sort of diversifiers typically that you see in this kind of environment.
That makes complete sense to me. So I think you've given us quite a bit to think about. Thank you very much for going through gold and the markets and a little bit of silver. This is really good.
Thank you so much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Will Rhind of Granite Shares.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.